lot of problems with identifying the structures, because there are normally some structures which are very small, and you know that they are part of the main high or the main low, so it's kind of confusing in some areas. Yeah.
Okay.
I can
Um,
only I can only identify the structures with the bigger time frames, like the daily. For that I can say like this is the swing high, this is the swing low. But when it comes to other charts, for example, the I can say that from the 15 minute, it's really confusing.
okay.
30, 15, yeah, it's very confusing.
Now, the reason I first ask if what type of trader do you want to be is if I want to be average, like I'll just be using like 1 hour, 4 hour with you. But I don't know. Can you be trading London session like maybe first 3, 4 hours of the day and it won't affect your day job?
Not really. Like as I told you, like at work, like I always have my phone with me, and I always look at chats also. Like I have plenty of time. It's not like you have to do this, do this, do this.
Okay.
Like you have a lot of time to look at the chats and what the chats are doing. So,
You see,
and
so
also
go on.
like for me, like my best trades are the swing. I think they call the swing trades. Like I later trade the run, yeah, like from the monthly premium to the. I like such trades because I don't have that stress. Like once I get the entry from the premium, all I have to do is to set up break even and then wait for the market to play itself. But day trading at times it's stressful. Like it's stressful because I don't have that psychology part of yours. Yeah, like trade and go out. So it's a little bit hectic for me.
Okay.
Like I need to learn like more about the psychological part in order to do that day trading or the scalping, because the scalping, it gets a new high, then you're like, oh, I think it's going to go up. I think, yeah. So, but with the swing trade ones, the breakup such is there. Then you put an entry. It normally doesn't go immediately like up or to go in the like
Yeah,
it's a little bit better.
I understand. So
Yeah,
let me start with the 4 hours.
yeah.
Because I have some drawings of GBP USD, so I don't want it to confuse you. We start on. Okay. So are you there?
Yeah,
This is the swing eye in this case.
yeah,
Then we have a swing low here. This spike on the time frame is going to be a swing low.
yeah,
Then this is a break of structure.
yeah,
So that's a break of structure. Come get what I'm trying to explain. The rest of these structures are just internal structure. They are what we call internal structure. So
yeah,
you find higher highs and higher lows inside this place too. To avoid confusion, the next break of structure has to be here. The next swing low.
yeah,
Then all these again are what I call internal structure. To me, to avoid confusion, we have swing low here, we have swing high here, we have swing low here. Then the next break of structure Forget this rally up. This rally up is just market participant trying to one liquidity and all. So the next week of structure is here. You see, then we have a swing low here. Then the next break of structure has to break this low here. That doesn't mean you won't see trading opportunities all this place, but just this is the correct way of doing structure. Can you see?
Yes, bro.
Then this is the swing low. The next correct way of doing structure is here. We didn't break it here.
Yeah.
See, when price fail to break it, what happens? The trend changed.
Yeah.
Now let's go back to where we started. This is what I call because you're on a downtrend. This is
Yeah.
why then lower low is the next swing low that broke the last low.
Yeah.
Then the next lower high is this. Where is the lower low? The next low that broke the last lower low is here. Where's the lower high? This is the lower high. Simple stuff. Where's the next lower low? Sometimes you might say, this is lower low, this is lower low, this is lower low. No, these are not.
Yeah. Yeah. Exactly.
These are internal structures. They are lower low for internal structures, but that one is when you zoom in and you're looking for trades inside the internal structures. But correctly, this is the correct lower low. The next swing low after the last lower low was broken. Get me?
Yeah.
This is the high here. So this is lower high. This lower high has not been broken. So what do you notice? Market ranged. Market ranged. Ranging, 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 ranging. Then after market ranging, ranged, we had the break of the lower high here. We had the break of the lower high here. You understand?
Yeah.
There's also something here. But this time you putting everything together, you understand there's a lower high here. So there's an equal high. An equal high is known to be a liquidity point where price likes to take things out. So you see why this place is a valid lower high, because when price broke it, came down back, you notice this is not a coincidence. This is not a coincidence. Price broke the higher high. Sorry, price broke the lower high and the equal high, and what happened is spiked. It spiked. So here is an opportunity. You have to zoom in, but I won't zoom in yet because I'm trying to draw a correct structure. Here's an opportunity for me to take trades downward, short-term trade. That's why most times my risk to reward ratio is 1:2, 1:3. Most times, because I don't like the headache of price going in my favor and I'll eat my break even now, I won't get any money. I just want to make 1:2, 1:3. Tomorrow, 1:2, I make money. I just want to be making money. I don't have strength to wait for price because, to be honest, out of 10 times, the only time market trends only like 30% of the time. So the rest of the 70% is always ranging. So if you want to predict the correct direction, which you are right, but you want to hold longer than you should hold, you always, unless you want to be managing trade by trading stops. But most times, market will go back to your break even or even go back to your stop loss. So because changes, the rest 30% of the time is the trend, and you don't want to be waiting for the 30%. of the trend. You want to be making money consistently. So this is an opportunity to sell. Yeah. So now back to the matter. Let me switch to the daily time frame. You see how clear it is now. Lower high, lower low,
Yeah.
lower high, lower low,
Yeah.
lower high, lower low.
Yeah.
I don't use trend line, but just for you to know that this at this point we're on a downtrend. The point of my is to know if we are on a downtrend or we are on an uptrend. You understand?
Yeah. Yeah.
Most times, in a case like this, if you are selling inside the internal structure, you make money than buying because you are in the
Okay.
trend, you are in line with the trend.
Yeah.
Let me delete. I'll still use lower time frame. Now, let me come here. This is a swing high. This is a swing high. Same thing happened here. Simple stuff. This is a swing high, and we have price rally down, but it didn't break anything here. It rallied up. Then what happened? We broke.
Yeah. Yeah.
So we have a break of structure here. Then where is the II? This is the II. Because this is the so this is the lower high. This is the lower high because this is the structure that broke to the downside. Then it created a lower low after the last swing low here. There's a swing low
Yeah.
here. This is the lower low. And the break of structure here, which I broke the structure because you want to deal with extreme end. This is the I that broke the structure, lower I. Yeah. You understand?
Yeah.
Then where is the lower low? This is the lower low. The new low that was created after this last low has been broken. You understand?
Yeah. Yeah.
Then price rally to the upside. This is a lower high. It has been confirmed because it broke the last lower low here. And where is the lower low? This is the lower low. This is the lower low. Now, I don't use trend line, but just for you to understand how simple structure works, you see, that's a downtrend.
Yeah.
That's a downtrend. You don't want to be marking in another. Some people or sometimes when you want to mark a structure, you'll be like, this is a lower low, this is a lower high, this is a lower low, this is a lower high. No.
Exactly. That's what I was doing.
You want to be focusing on swing highs and swing lows. This in a case like this, if you are focusing on sell, you will make more money because you are in synchronized with the trend. Yeah. And like I said the trend don't trend forever. It trends only 20% of the time. You understand? So that's why you see short trends. Like this one is a short trend. Previously, we have a short trend. So don't convince yourself and think, okay, this one is uptrend. Now, no. That's what we have accumulation phase, distribution phase, and markups.
Yeah.
So this right here is a downtrend. Now, when we created a lower low here, there are two things that changes the trend. You see that price failed to break the last low. You see what happened here? The lower low was like it failed to break twice. And what happened? Boom. The trend changed. It broke the trend line. It broke the. It didn't. It failed to break the lower low and it rallied up. You see what happened there?
Yeah.
So in this case, most people that took advantage of this market structure change, they will make money by buying. Because if you go to the lower time frame, there are lots of buying opportunities here. Buying opportunities. buying opportunities, buying opportunities here, in fact. You understand?
Yeah.
Now, I want to go to the overtime for and give you examples. Market structure is the first thing that you need to do. Sometimes safe stress. Okay. You remember, okay, let me delete it. You remember this rally up? Now, we've been looking for downtrend, right? This rally up now, we'll look for market structure that is trending up on the moving time frame. All these lines, I don't use them. I'm just marking them on the chart so you won't get lost.
Yeah.
Now, this is a swing low, a swing high. Okay, let me start from here. This is a swing low, lower high. This is a swing high.
Yeah.
This is a swing low. This is a swing high.
Yeah.
This is swing low. Swing low. Swing high. Swing low. Don't get lost.
Yeah.
High. Swing low. Swing high. Swing low. Swing high. Swing low. Swing high. So explain swing low. Yeah, this was broken. Now let's go back to the whole started. This is a swing low because I don't want to be mentioning too much stuff of what we'll be discussing in the future, so you won't get confused. But I don't know if you understand what happened here.
I understand. I really understand. Yeah. I understand.
You took out the low here and created a swing low. Then we had a break of structure here. We had a break of structure. I know normally if you are to take probably this is also an II. Sorry. Oh, sorry. Now This is an higher low because there's also, I don't want, this is a push phase. I don't know if you have about a push phase.
A bush?
Push phase.
Okay. Yeah.
You've heard about it?
Not really.
Okay. The push phase is like the momentum move to the upside. We have push phase and exhaustion phase, more like a push phase and a corrective move. When price moves up, you try to correct. So when you see strong candles like this is a push phase. It means price is trying to go up. So I don't want to confuse you. I want things to be a bit more obvious to you. That's why I started from here. So this is an iron low. Now, I want you to focus here. This is an iron low, and we have when price took out lows here, the liquidity, it created an iron low. Then it broke this structure. Look at this iron low started from here. It started from this cup. Started from this cup. So that place is also a swing high. It's a previous high. So when price broke that place, where is the next high? This is the next high. Because this high is not the next high, because this is a swing high. This is a swing high. When it broke this place, it was trying to come back down, but it never made it to the downside, and it broke upside also. So this is the swing high.
Yeah.
Then price came back down and created. Then price came back down and created an higher low.
Yeah.
See? The higher low is higher than the last higher low. Then we also had a break of structure here. Can you see?
Yeah.
It might be confusing, but with time you will understand. This is a correct break of structure, and this is a correct break of structure. This is not a break of structure because this right here is liquidity. Price is building up something. You see, lower equal low.
Yeah.
That's not valid structure. This is valid structure. We have a break of structure, higher low, higher low. Then when we have a break of structure, this is the correct higher high because that's the swing high, the highest high. That's why it's called the higher high. The West came down here, which is this. This is the highest low after this one.
Yeah.
You understand? This is the highest low. Then price must break this higher high to validate another higher high. This is not higher high. Okay, I get him.
Yeah, I get.
This is not higher high. This is like this one right here is not the correct high. This is the correct high.
Correct. So the correct higher high is the high that breaks the previous high.
Exactly. When you're dealing with swings.
Yeah, when we're dealing with swings, yeah.
So imagine price hasn't broken this higher high, and you saw something like this. You would think the price is about to come down. Imagine price hasn't broken this high.
Yeah.
This is also a downtrend or in an internal structure. It's confusing. You think price is already coming back down.
Yeah.
But because once you know that, okay, this higher high has to be broken, and it's yet to be broken, and we already have higher low here, you will know that price is still on an uptrend. So you'll be taking of a downtrend. So anything that makes you take a downtrend trade, that means it's a counter trade. Of course, you win, but in your mind, it's a counter trend trade. It's not an uptrend. You understand?
Yeah.
The moment price break this higher high and came back down, this is the next higher low. The highest low after the last higher low. Then what happens? then what happens? We need to have another break of structure at the next higher high. This is correct again.
Yeah.
But the price wasn't broken until this place. Can you see?
Yeah.
Can you see? So after we had the higher high that broke this last swing high, then this is a lower higher low.
Yeah.
Why is it an higher low? Because after we had the swing high that was created, it was higher low because the break of structure was confirmed right here. The lowest low that break the highest swing high.
Yeah.
It might be confusing, but don't worry. When you after the video, you understand what I'm trying to say. Because this is the
I'm
most
understanding.
this thing. I know it might be boring, but this is the most important thing you need to get before you move further to
Yeah.
anything.
I'm really understanding it. I'm understanding it because I was labeling them like pretty different. So I'm trying to understand. I'm really understanding each and everything. Correct. I'm understanding.
Before you're always lost.
Yeah. Before, recently, I was, for example, the high before the break of the structure, that high, yeah, in the middle.
This is higher low. This is not an higher high. Why? Because a break that is greater than the higher has not been confirmed. It is only
Yeah.
confirmed after we have a new break of structure. So you can't say this is the lower low because remember before we had the break of structure here, there is still an higher low that is left here. So now this is an higher low, this is an higher high because there's a break of structure that confirmed it. And this is an inducement. Also, we'll talk about this later. This is an inducement. This is an inducement. Now, where's the after this higher high? I said this is an higher high. Where's the lower low? So where's the higher low?
It's down. The one down here.
And what if you notice something
Below inducement.
I can go full margin on this kind of setup. This is like an higher low, but it's not an higher low, it's an inducement. So the moment price comes back down and take out the liquidity, you don't have to wait for if I'm to switch to the other time zone, there are demand zones here. There are demand zones here. We see clear demand zones. But you don't have to wait for price to come back. The moment price takes out the last inducement, I don't want to mention it because we're still going there. The moment price takes out this last inducement, we already have a new lower low. Then what would you do? All you have to do is we look for lower time frame entry, this iron low. And I'm already seeing them, but we can't see them because we haven't gotten there. We just move for price to get to the lower low. Then what happened? Boom! What do you notice? Price shoots up. I see. So
Yeah.
see where we are coming from. You see where we're coming from?
Yeah. Yeah.
If I'm to draw a trend line now, I don't use it, but just to compensate what I'm trying to say is money. One touch, two touch, three touch. The reason I don't use trend line is because most times you'll be waiting for price to come back down again.
Yeah.
Yes,
Exactly.
opportunity. Yeah, value trade opportunity here, value trade opportunity, value trade opportunity, value trade opportunity. You see, but trend line is just to show you that we are on an uptrend. You understand? Now, this is the highest high here. Then we have a break of structure.
Yeah.
You get everything with time. Because see, and this is the highest low. Now, where's the highest high here? All these ones are rubbish. They are liquidity. You see how they are doing?
Ranging.
Yeah, this is what I call the accumulation. When price is reaccumulating, all you just have to wait for But bro, if you study the chart, you see secrets. All you just have to wait for is a spring. Is that spring is present in what's it called in Wyckoff, but I don't you don't need to learn that. All you just have to wait for is a spring means a sharp shoot down that took out all the liquidity of the ranging, which is this one. This is the spring. You see, it spiked all the stop loss of this ranging. Do you see?
Yeah.
What happened after? It created our entry time frame. We're still going there too. Then what happened after that? Boom. It always works like magic.
Yeah.
And you see,
Yeah.
so back to the matter. Don't let me digress.
Mm.
This is your higher eye, and the higher eye was broken here. We can't say this is a lower low because there is a low that was lower than the low here. You understand?
Yeah.
We have 1 minute, less than 1 minute to go. Come. Because this is
Yes.
a
Okay.
because normally it's supposed to be these 2 times. That's like 1 hour, 20 something minutes, but I'll have to do another one again because of the first time. You understand?
Yeah. Yeah. Yeah.
So let it end. I'll send another link.
Okay. Okay.